Arun Jain, the Chairman and Managing Director of the company, joins us now to talk about the quarters to come. Mr. Jain, good morning. You've revised your full-year revenue growth forecast higher to 26 to 30% versus 22 to 26% earlier. But your asking rate for Q3 and Q4 is low at about 1.5% to reach the middle end of your guided band. Why such a conservative estimate for the second half of the year? Should we expect a slowdown?
No, it's not about expecting the slowdown in product business. As I highlighted, it's an annual business. It's not a quarterly business, and we need to look at the annual target of 26% to 30%. I think is a number which is very, very healthy growth in a product business. So I would say one has to look from the products business, which is not quarterly business. We have done many steps to ensure that mitigate the risk by having a multiple product line so that we mitigate the risk of uncertainty in the product business. So I think I will guide the investor that they should look at annual numbers than the quarterly numbers.
All right, well, those are Bharti Infratel's numbers that are coming for you on the screen. The net profits have come in at 579 crores for Bharti Infratel. And just to read from the press release itself, the net profits are up 25% on a year-on-year basis. The EBITDA for the quarter has risen about 7% year-on-year, and the revenue for the quarter has gone up by almost about 4% year-on-year. So consolidated net profits at 579 crores is a 25% year-on-year growth, and it is largely in line with what the street was expecting. The street was expecting 580 crores. It's come in at 579 odd crores. On the EBIT of the company has gone up by 9% year-on-year at 734 crores, and the EBITDA has gone up by 7% year-on-year. So the operational performance is a 7% growth that we've seen.
What is the EBITDA that have they given it?
1308 crores is the consolidated.
That's a little lower
EBITDA
than what Reema's poll threw up. I think 1343 was what the street was expecting. So perhaps there could be a little bit of a disappointment over there. The stock's moving a little lower at this point in time. As well, revenue has come in at 3082 crore. In terms of the poll, we'll have to wait and see what was the revenue number. It was only expected to rise 2%.
Yes, in the press release it says the consolidated revenues have come in at 3038 crores, which is a growth of 4% over the corresponding period. So it's a 4% growth.
It doesn't sound comparable for us, but maybe we'll have to wait and see about the revenues. Our revenue previous was 3016. So at 3038, it doesn't sound like 4%. Maybe that's a different number we have to read. The revenue, the profit itself has come in line with expectations, and now we will wait to see what the EBITDA percentage might look like. The poll was expecting about 43.6, a little over 43.5. So an improvement in EBITDA margins was expected. We'll have to wait and see if that is delivered. We should be able to get that in a minute.
All right, so these are the numbers. Basically, the other income for the company has actually gone up year-on-year. So 215 crores of other income is what they've reported this quarter versus about 113 crores same time last year. So that's something to look at. And as we mentioned, the net profit at 580 odd crores compares to 465 crores same time last year. So it's just that the EBIT number is slightly lower than estimated. The EBITDA at 1308 crores is a growth of just about 7% year-on-year. So that's perhaps something that the stock, and Bharti Infratel has been a very good, well-performing stock as well. So a little bit of profit taking too is what you're seeing in the numbers. We'll come to that in greater detail in a bit, but first back to Intellect Design Arena. Mr. Arun, will there be an impact of seasonality in Q3 and Q4? If yes, what could the extent be?
I'm not saying anything about that. It can be better than this. So I think let the investor make a call. I've given the 5 indexes on which they should measure the company on.
Well, you have guided to break even or become profitable in Q4 in FY16. What will be helping that? And does it include other income? That's why you will break even.
No, it will be guided to be profitable in Q4. I think I stick to the same number. What is aiding is the acceleration in the bank spend in digital space. So our revenue will grow. As of now, our expense line is close to $32 million per quarter. So few deals here and there can make it positive. So this will be PAT positive in Q4. Though I don't have anxiety to make it, but this will naturally happen in Q4 EBITDA positive, and it will not include any extraordinary other income.
So did I hear you right? You will be PAT positive in Q4 FY16.
That's right, January to March quarter.
Okay. Well, since you are growing at a reasonably fast pace, is there any likelihood of an overseas listing or an overseas capital raising?
You pick up so quickly such kind of a patterns. It's not about listing when we are growing and market is accepting. So we picked up 5 things or 4 things I would say we picked up right. In 2010, we picked up the serious pain of the customer where banks must spend. So our making the right choices was the first important point. We did it right. Second thing, we picked up a pattern of culture of design thinking in 2011. And that culture of design thinking, we created one of the world's best design center called FT8012, 30,000 square feet center where customer can participate into the digital transformational agenda from that center. We inaugurated that well ahead in time in 2013 when people are talking of design thinking now. We did it in 2013 itself. The third thing is we focused on how you deliver best to the customer. D-3 OTIF, deliver 3 days before on time in full. That's the customer for life. If you keep delivering with the implementation certainty, he is there with you. And fourth is constantly keep on investing in identifying the patterns and put full suite of digital 360 technologies which nobody has invested in the world. So these 4 patterns that we invested is just helping us to really drive this agenda, and for that, if some capital raising is required for accelerating our platinum market agenda of America and Europe, maybe at that point of time, when we need a fund, then time we can look at a listing. But listing is not priority for us. If we need a fund, then any other means of raising fund or capital would be our agenda going forward.
All right, Sharon, just hold on for a second. The Bharti Infratel stock is now moving to the lowest point of trade. Some more details coming in from the press release. The tenancy of the company has not grown as much as what the street was expecting. So the average sharing factor has come in at 2.15 times versus 2.13 times last quarter. And the expectation was that the tenancy would improve to about 2.16 times. So there is a bit of disappointment on the operational front for Bharti Infratel for sure. And that's the reason the stock is now down almost about 3%. EBITDA numbers as well lower than estimated. But Mr. Jain, do you anticipate the need for any funds in FY17 or would the requirement be for years after that?
It can be in FY17 because I think the board is constantly on the track. This 30% growth is a must for us to establish our credibility in the global market and in Indian market. Once we establish that credibility, then we take on a next call that what is the next hump can be there. We are looking 20% we can grow year on year for next 3 to 4 years. So that's not a concern for us on sustained basis. But if we need to accelerate that growth from 20% to 40%, maybe we need to look at those decisions at appropriate time when we can demonstrate to our board that we now are sustainable, predictable, profitable company. And then we need to raise the capital. So I would like to leave it to the board to take final decision on such things.
Yes, it's just that work for things like overseas listings, etc. happens well in advance. So the preferred route for capital raising would be overseas listing. Any structure that you're looking at?
And we have not thought too much about it. I think we are thinking focus on the business and keep building the leadership here. We want to create an India company. So my pride is having an India company on the global map where we can repeat the same pattern as the outsourcing industry has done. In a product space where there are the big giants of $7-8 billion companies sitting in America, how do we beat them by our agility and our technologies? And that's which will drive the entire wave of next 50 to $100 billion in the product industry. And that's why our dreams at Intellect is.
So we should take a 30% growth as sustainable.
I'm saying 20% is sustainable. Anything more than 20%, we are trying to make it possible in 17, 18. 30% in 16, 15, 16 is there. 16, 17, 20% we are confident of. 30% we need to make it possible once we are on the business planning life cycle. As of now, 20% is what we are looking at.
All right, Mr. Jain, we leave it at that. Thanks for joining us. That's Intellect Design Arena. Been a big gainer this year. But let's move on to another stock. Sunil Duggal, the CEO of Hindustan Zinc, joins us.